Okay, good afternoon, guys. Welcome to the live trading clinic. My name's Steve Ruffley. We're going to focus on the Bank of England today. A little bit of a bonus, I guess. 10 minutes before, we've got Mario Draghi, president of the ECB, due to speak. I mean, you'd have to be living under a cave or in a cave to kind of know that the data right now, to anything to do with interest rates, is really moving the markets. All these, key points that Mario Draghi is making about quantitative easing, and kind of how the ECB is going to move forward. Not that I agree with most of it, to be honest. I'm not quite sure where Mario Draghi is going to magic all this money from, but the markets are certainly listening. So big moves in the currencies and big moves in the indices alike. So really interesting. What I'll do, as always, is I'll go over the standard presentation, just take a few minutes, and then we'll have a think about how the markets have reacted to previous Draghi comments, and we'll go through some charts. I know somebody's asking about what the GBP JPY will do today, so I'll go through that. And again, guys, any questions you want about the fundamentals, do ask me. And any products you want to go through in detail, just ask me and we can go through. We've got a good 20 minutes before the action starts. So before I start, as always, the risk warning. Remember that spread betting and CFD trading carry higher risk or capital, resulting in losses that exceed your initial deposit. The membership suitable for everyone, so please ensure you're fully understand the risks involved. The information currently provided here under no circumstances or an offer of solicitation to invest. Nothing here should issue investment advice. The information provided with the accurate the data is produced. Educational only. Content of the webinar is personal opinion of the moderator and Intro.com. The content is not constitute financial investment or tax advice. Intro.com does not accept any liability for the content during the session. So we're going to go over some live charting analysis, multiple time frame trading. Again, the only way I know how to view the information that we all have access to. Fundamental analysis, that'll be from Mario Draghi and Carney, the boys of the Bank of England. Then obviously the account's open. If there's anything big moving, I will do some trades. Just look through to the markets now. I mean, we've seen this pattern in the indices time and time again, where the markets open up weak and then gain strength, after they open. So again, this morning we saw the sell-off. Market hit some good key levels, closed with a bit of a wick, and then plenty of green. So markets have been relatively positive, I would say, and a lot of this reflects what's been said about the quantitative easing from the Eurozone, which is helping the European stocks. And then there's the kind of free money type thing with interest rates, but we know that interest rates are not going to go up in Europe anytime soon. But obviously, Janet Yellen has been making hints that we will we, won't we? It's all getting massively boring now, to be honest. We know that a rate hike is inevitable, and people are just making bets. Will it be this year or will it be next year? I think. Really, I think a lot of analysts were at 50-50 if it's going to be this year or not. I'm quite cynical, as I said, so I still think that we'll put a rate hike up in the US before Christmas, and then we'll deal with the fallout in the new year. So realistically, you think about how that's going to affect the markets, then, again, you're looking at, anything dollar-based. So interest rate hike, is going to send the euro dollar, plummeting down. And, the dollar yen, really rallying. How far can the dollar yen go? Well, I still think we get back to, previous highs. I still think, we've had every opportunity, to break this range here below 120. And, every time we have, we've made a concerted effort, we've rejected it. So really, for me, I think previous highs up at 135, as I've said in many a presentation, it's still relative. Basically, we had this real kind of, strong triangle type pattern on the weeklies and monthlies, and we broke out, and we haven't, been able to get back down below that 120 with any significance. So what doesn't go down in an uptrend must go up. So as interest rates inevitably are going to go up at some point in the US, then I can only see, continued strength in the dollar. So, it's the same situation. You're asking about what will happen in the pound JPY. And it's the exact same scenario that, the market, the dollar and the pound will continue to appreciate against other currencies because, let's face it, as soon as the interest rates go up in the US, Mark Carney's only got a limited amount of time. We've kept interest rates low for 7 years. Not these things are illegal or wrong, but they're morally wrong. You cannot keep an economy with growth in inverted commas, ticking along, purely based on consumerism and allowing people to borrow, cheap money and, over leverage themselves. So it doesn't matter what I say. It doesn't matter what anybody says in the world. Interest rates that stay low for an extended period of time. Not that they've ever really kind of been in this situation before, but we've seen that, the interest rates have cycled cycles, inflation has cycles, everything has cycles, and we will at some point in, be it 3 months, 6 months, 12 months, 18 months, doesn't really make any difference now, does it? If you keep interest rates ultra low for 9 years, 10 years, eventually they're going to go up. And as I say, what they're worried about is people with mortgages. Well, it don't matter, does it? The majority of people who've got a mortgage over the last 10 years has a mortgage of 25 years plus. So they're still going to have 20 years of, kind of high interest rates. So, and whatever high interest rates are going to be, they're going to be higher than what we've got right now. Okay, somebody's just saying that there's a problem with the sound. I'm not quite sure if there's a problem for anybody else, but just let me know in the chat window if you can't hear me. I'll keep talking in the meantime. So yeah, I mean, I really think 135 is where the dollar's going to get to, and again, we're still on the weekly as a buy. So all that kind of negativity, all that downward from the toppy movements haven't really changed. And look on the dailies. See how this triangle pattern worked. The inevitable breakout, and then we close inside, and then green, 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 green. Bit of consolidation, green to the tops. So yeah, 125 is really achievable. It's absolutely fine. Okay, a little bit concerned that nobody's come back and said they can hear me. Okay, all okay, right. All right, yeah, cheers, guys. All right, then, thank you, Z and Peter. So again, I mean, if you look at these kind of patterns, this is what we love, and we can look at this pattern in so many ways. The big kind of, daily sell-off, the big rejection, the market really just, tests a couple of times to get below, these kind of fake outs. We see these long kind of, tails where the real body tells you the story. And it's very much like the indices. Every time we see these big sell-offs, they're greeted by green. So, plenty of, big red, but then green. Red, green, red, green. So as the market consolidates to this point here, we have that one final fake out, then the market continues the uptrend. So really these highs where the market, this consolidation point is where the market is looking for. So once we break above 122.085, the market really has 122, the 50% retracement, which is going to be key. Hold above that, then we get above 125. As I said, 135 is certainly achievable by the end of the year. I mean, you think about how far the market can move in a couple of days. So we can have a down move, of 600 ticks or so. From where we're trading now to get another 600 ticks. We could easily, get up back to 135 in a week's trading. So I think consolidation's over. The market's told us what it wants to do. So I think the dollar's only going to get stronger. And conversely, when we're looking at currencies, you have to look at them, in baskets, in pairs. So, what happens in the dollar yen will reflect what's going to happen in cable, what happens in the euro dollar. Now, it doesn't matter what you think about the euro dollar. Plenty of people asking me in the higher time frames where to buy. You tell me where to buy. There isn't anywhere to buy. Okay, we've had 9 months of selling, consolidation. I mean, the market's telling you, wick, 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 wick. All that rejection below the lowest fib that we've got, the 23.6. Every time we tried to close above it on a higher time frame, we have failed. So this market is going down. Okay? They didn't want to get above 114, 115, really, and hold though with any conviction. So again, rejection at the top of the range. You kind of shooting star type thing. Down, consolidation, down. So really, the market's only got a tiny bit of grace, really kind of 60 ticks before it's in no man's land. 380 ticks down. We're back to them all-time kind of, recent lows, and then it gets smashed. Okay? And where's the market going to get to? Well, it's going to get down to parity, at 1.0. And why? Well, because Deutsche Bank, RBS, any major, trading house told us at the beginning of the year that they were eyeing up, parity in the euro. So as the dollar appreciates, the euro quantitative easing, its low interest rates, its very, very stagnant growth, its lack of ideas are going to mean that, the euro's got nowhere to hide. So euro, once it's below, 1.0461, going to get hammered. Okay, annihilated, and it's only going off what's happened in the past. Okay, what's happened in the past will happen in the future. So bang, selling, consolidation, rejections, continued selling. So if it can move in 9 months, 3,500 ticks, we could easily be getting down to, 0.8, 0.75 in the euro. And that is just, the start of it. Who knows what could happen? What goes down will come up. But I mean, what you want to be doing if you're selling the euro, you want to be selling high. You want to be selling up here in the red. You don't want to be selling now necessarily, even though it could go down, very, very sharply, because you'll get these pullbacks. But at the end of the day, you can't really, deny the kind of the technicals. The 50% was the absolute pivot. I mean, you cannot say there's a better level to get short than the 50%. And we get down to the 38.2, think about it, 61.8, real key level of where the market's making its decisions. So it can only get back to where we drew the Fibonacci originally from here to here, and that's the 0 points. When it breaks the lows here, the double bottom, there's going to be very little catching that euro. So, and again, I mean, is it good or bad news for the European zone? I mean, it depends how you look at it. At the end of the day, with quantitative easing and bailouts, we just expect to fix countries like Greece. We expect them with higher taxes just to bring, their GDP levels, back 25% that they've lost. It's just nonsense. It's just absolute nonsense. We haven't learned any lessons from the previous credit crunch. So obviously going to focus on a little bit as well on the GBP. GBP is a funny one, really, because it's got a similar pattern, to the euro dollar. So that kind of, big, heavy sell-off. Not quite as extended as the euro, but then, the same kind of scenario. We've bounced towards these lows, but I see the opposite happening in the pound against the dollar with the euro. What I'm expecting to see is we really find it very, very difficult to break 150 and hold below it, and I don't think we'll test these lows at all. And I think what's going to happen is we find, with that fundamental scenario that as the US put rates up, we know the UK is the only other likely candidate to put rates up. So as it kind of again gains strength, get back to the 50%, just below 160, and I think 164 is very achievable by the end of the year because well, perhaps not the end of the year, but perhaps Q1 of next year, because as soon as we have a definite on rates, and by definite I mean we've got more people and analysts betting that interest rates are going to actually go up than not, and that will come in the next certainly the next kind of 3 or 4 meetings from the Fed, and I still think we've got a very, very strong chance of a December rate hike. But if we don't have the December rate hike, then it is inevitable it happens first quarter next year, and if it doesn't, then Janet Yellen's going to get fired. You can only be data dependent. You can only lead the markets on for so long, and that's the reality of this. You can only kind of do your job to a certain extent and say forward guidance, data dependent. But you might as well have a robot. If you don't tell the markets anything real, then you're not doing your job. So I think going through the weeklies, I really think the pound's going to struggle to stay low. And really, from my perspective, although we've hit the 50%, we haven't got anywhere near to breaking the 0 point in the low. And what's happening is we've found really good support on the 23.6. So again, I mean, well, as I've said to you a million times, 80% of the time a strong directional move retraces to 50%. So we've done that. We've retraced the 50% perfectly. But what we then see in normal scenarios is the downtrend continue and we're going to make a new low. But I think that will happen in the euro. I don't think it'll happen in the pound. And obviously the dollar's going to appreciate as interest rates go up. But I think that it's going to hit the euro a lot harder than it is the pound. So I think that the pound's going to struggle to break these lows, and then it's going to gain strength. And as people dive into the dollar naturally, they're also going to dive into the pound over other major currencies, and that's going to send it up. So 164 is my target in the pound, and I said this for quite some time. I really don't see these bottoms being attacked. So other markets, the DAX are again making these new highs, remaining quite strong. Gold, well, all know my views on gold. Million and one times I've told you, 1305, that 50%, bang, bang, bang. So all we've got to do is get a few more ticks before we break these lows. We're only talking like 200-300 ticks now, absolutely nothing. And that $1,000 is going to be the target. I mean, gold's going to get annihilated. It's as simple as that. You look at these patterns. Lower high, lower high, lower high, lower high, lower high. This trend line has been absolutely, just absolutely solid. Every time we've tried to close and consolidate towards the highs and get back to these key levels, just rejected it. So we're below the 50% of the mini fib we've done. So really, we're below the 61.8. We've only got the targets of the lows down at 1083. And once we're below that, then we get down to 1030 in no time at all. Get to $1,000, I'll probably smash back down and get to below 950. So all them people that said to me gold was going to go back up, who's brave now? Who's buying gold now? Nobody. Okay, so there we go. Yeah, I mean, obviously we're listening out for Draghi's speech. Obviously that's in a minute's time, so I've got the squawk on. So anything that does come through, guys, I will shout it out. So it's good. So gold, anyway, yeah, gold. There we go. So just got to keep one ear out for Draghi's anything from Draghi. We're listening for anything new, with anything to do with quantitative easing and these kind of these measures. He's talking about extending and bringing in. So pretty strong in the stocks. Seen a bit of a gap up in the GBP USD. So interesting. I mean, the entry point for the GBP, just to answer Raymond's questions. I mean, it's going to be on the smaller time frames, the hourlies, perhaps. So if you want to buy it, then you're looking to buy around 1.5374, a low level, or you're looking to it to have a quick spike down to maybe 1.53291, and then you want to buy it and hold it. I mean, I'm talking about longer term trades, to get to 164. That's not going to happen in an hour or a day. Remember, my average trade is 7 minutes, so I'm always looking at a combination of time frames, very much like this. This is my view of the GBP. So if I'm a buyer of the GDP, I want to be buying it down here, don't I? Around the low points, or around here, the 23.6, or the low points here. I don't necessarily want to buy it here when it's got these bottoms to potentially break. But again, that's a trade. That's like a longer term trade. It could go down before it goes up. So what you're looking for is your hourly, 15-minute, and 5 minutes. You want to buy spikes like this. It spikes down for no reason, then buy the low of the body, and then let it go up to the upper Bollinger Bands, get back to 15395, etc., etc. So obviously, focusing on the Bank of England today, we've not heard anything from Draghi just yet, but we're focusing on inflation. The inflation target, as everybody has, at 2%. We're looking at the asset, buyback facility at 375 billion. Is there going to be any change on that? But obviously not seeing any change of the interest rate just yet at 0.5. But then we've got the minutes, we've got the quarterly inflation point, we've got the MPC vote of being unchanged, which is 8 and 8. Then we've got the vote to cut, which is 0 and 0, and the vote to hike, 1 and 1. So I think the market will definitely focus on that. Is there going to be any change in the view of voting members, looking for a cut or looking for a hike? Obviously, we don't think anybody's going to cut interest rates. I think we're way out of the prospects of a rate cut. But I think the prospects of a rate hike are really, they're there for everybody to see, aren't they? I mean, again, if the US are talking about it, we know the UK has to be looking at it. And at the end of the day, house prices, back to pre-crunch, highs. We're seeing a real struggle between, living wages and actual wages. People saying that inflation, is fine, but wages, normal wages I'm talking about, not keeping up with, the rate of inflation. People using stupid examples like, well, petrol prices have come down and food prices have come down. It's just nonsense. I mean, it's just absolute nonsense. In relative terms, everything is more expensive. It just is. Everything's more expensive. So I would be really surprised if the Bank of England can make a strong argument for keeping rates low based upon the inflation that we've got, because we've created the inflation we've got. You can only control inflation really for any extended period of time by controlling interest rates. So we've kept interest rates historically low. So we don't necessarily know what inflation should be, and we can't actually say hand on heart that we're at a realistic point of how inflation should act, because we've manipulated the environment. So I guess, guys, yeah, nothing from Draghi that I've seen. I haven't seen any major movements in the euro dollar. Pounds really kind of, I guess, looking a little bit negative, I would say, in the short term. And, that's fine. We can sell things as well as buy them. But I'll be looking for, very significant spike downs and be buying any major low points in the pound, because that's where I'd find value. Dollar yen, not really kind of, again, I've kind of gone through that. I think, 135 is inevitability. So again, be buying low. Euro dollar, again, difficult one. It's very rangy at the minute. Well, Bollinger Bands are very close together on the hourlies. So expected to break out, but the trend is down, so they expect to break down. So we start to, to go up and quickly break these upper levels, then I think that's a, bit of a fake out scenario. The market then gets back, to this, these lows here, and got big targets, plenty of targets on the low side for the euro dollar. So I can't see anything saving the euro dollar, to be honest. And I've said that for, I don't know, years and years and years now. Gold, again, it's just kind of waiting. From now on, every single day, you're going to see a big move in gold, and it'll be a big spike up and sell off, or a big sell off and then jump back up. But it's going down from this point. I cannot see how we're, trading at 1108, how we can't, be all talking about that 1000 psychological level. It's not getting back to 1900. It's not getting back to, 1300 anytime soon. So what doesn't go up has to come down. So I think gold is very, 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 very kind of, bearish in my mind at the minute. So pound look a little bit negative. Again, still nothing that I've heard over the wires from Draghi. So we've got 10 minutes really before. So as I say, these are the things. I mean, FX Street are very good for these things. So this is what I look at. I've got Reuters, Bloomberg, I've got all the toys, but I look at things like this. I'm looking at, the asset purchase facility, 375 billion. So any changes, the rate decision, the Bank of England minutes and inflation report. Obviously, we get that information from the news services and the Squawk. And then we've got, again, these things are going to be focused on ever more. Unchanged 8 and 8, anything, any, changes in these things are going to have a possible implication on how people, view the future interest rates in the UK. And obviously that'll have an impact on the currencies. So, it's not difficult to get your hands on this information. It's a lot more difficult to understand what it means and trade from it. But, this information is there and free for everybody. Again, charts like MT4, free. I prefer using MT4 than I do with, things like CQG, which costs about £300 a month. I could have anything I wanted to trade, but I choose to use the free things because why wouldn't you? Why wouldn't you use free? So, again, bit of a, I think the main kind of, this is why I always look at these correlated markets, because this is how I view the world. Okay, I view the world through stocks, okay, gold and currency. So this is it. I don't need anything else. People often say, what's the Norwegian kroner or what's the Aussie dollar doing? Don't care. Who cares about anything? Who cares about anything? Kind of from Australia. I don't really kind of understand that whole kind of Asian Pacific type stuff. I don't really understand the people. I don't understand why anybody would care about it. And I'm not interested in being right, as I always say. I'm interested in making money. So I trade these products because I understand how they move. I understand the correlations. I understand if the euro is getting slammed, that you've got a good opportunity to look at a quick short, maybe in the pound dollar. Okay, if you've got a lot of strength in the dollar yen, dollar's going up, gold should come down. Okay, gold come down, indices should go up. So these are the correlations that I look at to give me a balanced picture of the world, the global markets as I see them. And when I want to then zoom in, I just again come back to all time frames. This is the cable, for instance, and I look at what the daily's doing, what the hourly's doing, what the 15 minutes doing, what the 5 minutes doing, and if I want to be buying it, I want to be buying it when it's down here. On the red. Yeah, I don't want to be buying it when I've seen 6 green candles. It sounds obvious, but if you're trying to buy it here, okay, there's a different picture on the 15 minutes, a different picture on the 5 minutes. So you use your 15 minutes and 5 minutes for your entry. You use your kind of daily, hourly for your idea of what the market can do. And people forget the absolute basics in trading. They start to make it very, very overcomplicated. Oh, I'm looking at the MACD with a 20-day, 50-day moving average cross, blah, 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 blah. There is no holy grail for technical trading. It's whatever works for you. Whatever works for me might not necessarily work for you. I just like to look at what's happened in the past, use it to predict the future. So that's it. I've got my fundamental biases. I've got my ideas of what currencies and commodities can do longer term. But I don't hold a trade for long term. So why should I bother focusing too much on that? Great if gold starts to sell off and I've got an idea to get to $1,000. Maybe I'll hold the trade for a little bit longer. But I'm not going to hold it for a day, a week, or a month, am I? And again, I might hold it for 15 minutes instead of 7 minutes. It's all about taking money. So we've seen a spike now in the GBP. So just from them lows. So again, like I was saying, if you want to buy it, you want to buy a low point. So on the 5 minute chart, you see a low point. Again, it's looking out for these things. You see the market really spike down, break this level, consolidate. She could have bought the low of this one, only take a few ticks of pain, now it's off again. But again, I haven't heard anything coming through the markets. Maybe this is just people preempting a change in the vote. So these are things, again, what makes trading so interesting, but also so very, very frustrating, doesn't it? It makes it so frustrating because there's 1,000,001 ways to trade all these markets. There's 1,000,001 ways to make money, and there's probably 1,000,001 ways to lose money. How many times, have you gotten at the side of a losing trade and you've lost much more money than you've made on a winning trade? It's just how the markets work. The markets are very unforgiving, and with something that's so competitive and so much money out there, then how can you expect it to be to be easy or to be fair or to get what you think you deserve. At the end of the day, we're just all retail traders, hanging on the coattails of the banks and institutions. That's all we are. I mean, there's no point trying to think you're anything else. You can be a good trader, but you're still a retail trader, which is fine. We all trade, on spread betting platforms. Very few of us have, the direct market access and, the kind of professional tools. So it's very difficult to scalp and very difficult to keep up with the professionals, but it can be done. Can be done. So, seeing that continued spike, and I wouldn't really call it a spike. We're just bouncing off the lows, really, in the pound. So I mean, obviously, we're going to keep an eye on the FTSE, keep an eye on the pound. So nicely, they're there together down here. So again, really, nothing's come through from Draghi of any kind of significance, which doesn't surprise me. Every time that guy speaks, God, he's difficult. Bring back Trichet. I never thought I'd hear myself say that, but bring back Jean-Claude Trichet. Mario Draghi, what an absolute waste of space. Cost me the best part of 50 grand the other week. Dear oh dear. But there we go, guys. What can you do? So just under 5 minutes now before we get this Bank of England stuff. So again, I mean, I'm going to be focusing mainly, I would say, on any kind of real comments that come through. Probably the vote to hike 1-on-1 is going to be my main focus. So I'm not expecting asset purchase to change, and I'm certainly not expecting interest rate to change. But I think a lot of people are going to be focused on the quarterly inflation report. And again, this is what makes it really difficult, this report, because it's trying to put our interpretation on what the market makes of the Bank of England's interpretation of inflation. Now, I'm a smart guy, okay? I know about inflation, I know about growth, I know about everything there is to know about economics pretty much, because that's been my business for 15 years. But really, even I, with all my experience, find it very difficult to understand how we can come to these figures and conclusions when we've kept the main driver of what we're looking at in the economy right now, which is interest rates, so low, because it really skews our true view of what normal people are experiencing. And I think it's all very well, people like Mario Draghi and Mark Carney, talking about these big things and how it's the bigger picture and the wider picture, and it's about businesses, it's about this, that, and the other. But what they fail to kind of understand is how this affects people's livelihoods, individual people. We're not talking about, a few people, we're talking about millions of people. I mean, put it this way, right? The Scottish referendum, that failed because 1 in 4 people couldn't afford a £50 raise in their mortgage rates. How many people in England do you think are at the point now where they're mortgaged up to the hilt, they've got credit cards, and people say to me, well, Steve, why are you so bothered? It's only a quarter point. Don't mean anything. Tell you what, guys, if you've got £500,000 mortgage and you're only 50 grand a year, then you're going to be sweating 25%. And also, once they go up, they ain't coming down for another decade probably. So everything everything that you see as value is going to be more expensive. So it is a massive, massive deal, and that's why Janet Yellen, has been so cautious about this, because, I'm telling you now, Ben Bernanke, Janet Yellen, Steve Ruffley, none of us have got a clue what's going to happen when rates go up. Nothing good. But, they are going to go up. All right, guys, just under a minute or so now. So, like I said, let's focus on that inflation report and the voters for the hike. So I'll try and say as much as I can as I hear it. So again, I'm going to be speaking very fast. I make no apologies for this, and we'll look for any movements, mainly in the GBP, USD, and maybe some trickle through to the euro dollar. So I guess across the board, gold's looking weak, indices at the tops. GBP still looking to get towards these upper levels. Just under a minute now, guys. We're expecting unchanged, but as I say, listen out for the inflation and watch for that voting hike from the members. 10 seconds. Unchanged, unchanged. Asset purchase facility, and also for the buyback. Watch the pound though. Watch the pound. Watch the pound. Real big spike down in the pound there. Outlook for global growth weaker. Okay. Growth likes to pick up a little bit. CPI below 1%. Okay, watch these lows. Watch these lows, guys. This is obviously the inflation report. First hike, Q1 2017. First hike, Q1 2017. Okay, so big spike down in the GBP now. Okay, so that's again saying the global growth outlook is not as rosy as we thought. So 2017 for the first rate hike has been mentioned. GDP 0.6%. 0.6% revised up for Q3. So big level down here in the GBP, guys, but I'm very loath to buy this, to be honest. I mean, this is if the market's taking this as the we're not going to have a rate hike, at all next year, then the pound's getting slammed here. A big level is 61, and this daily level here at 152. Remember, I'm still a buyer, but then again, I mean, what's coming out today is saying that the growth is not as expected, inflation's been a problem, and that means that 2017 might be a possibility for rate hikes when a lot of people are banking that it will be some point in next year. So that's not a great picture. So again, FTSE's taking that a bit positively because obviously if rate hike doesn't happen, then people are going to pile into the stocks because free money will remain. The MPC won't unwind the quantitative easing until the bank rate's at 2%. So that means, again, probably more quantitative easing remaining in the markets for an extended period of time, which, again, we've seen in the Eurozone, drags the euro down. The same picture in the GBP. Okay, so big level here to break. Big level here to break. So we break this level with any kind of conviction here, then, I don't think we're going to get down to our next levels at 1.5242. But big level here. So all data is unchanged, but that's why we have to listen to the squawk. We have to listen to the information coming through. It's all that inflation report that is not good. Yeah, it doesn't sound good, for the UK. It doesn't sound good for what's going to happen with potential rates. Which, well, it does sound good. So the good news is it doesn't sound like rates are looking like they're going to jump up anytime. First to second quarter. They're talking about 2017. I don't know how they can substantiate that, and I'm going to need a bit more information on that, I'm afraid. But that you can see that right now that the pound is under a lot of pressure now. FTSE jumping up, DAX not doing anything. SMI obviously very unchanged on the UK data. Gold doesn't even blink. But we're seeing the move, below that 61.8, 153,286. So again, could be a good level to get back in, if we reject. But we're trading off the fundamentals now, so difficult. I mean, again, I'll just go back to the old time frames. So we're looking at the hours, looking at the 15 minutes. So we've got to let the first 5-minute close, really, because, I don't think we have to bother doing a Fibonacci. But you'd expect that, whether the low to the high is, the 50% would be the target, which is way up here, 153,470. Then we get below 133.90 and want to make new lows. So again, this is what we're looking for, these scenarios. So only 2 minutes for the next 5-minute candle opens. If it opens below 533.90, you'd expect a new low to be made. Again, that's trading off the fundamentals, not the technicals. As I say, personally, my view as a buyer, but you've got to analyse that inflation report that's come through, and it didn't really kind of, it didn't bring any good news to the table. So, yeah, asset purchase buyback to remain on track for some time. They've said. Okay, well, like I said, guys, I mean, you're seeing moves in the markets, around these interest rates, will they, won't they type thing, much bigger than you see in non-farm payrolls. But just goes to show how, UK data affects UK markets. Europe and America not interested. So again, it's very important to focus on the right things. So just a minute or so before this 5 minute candle open. So we've opened towards the low, below the 60, 1.8. Really what I expect is the market maybe potentially to pull back to the daily level and then continue down. So the daily level, just here at maybe 1.53286. And if it doesn't really kind of make any strong attempt to hold above that, get to the 50%, then we're definitely going to make some fresh lows. And as I say, I'll be buying, plenty down here. That's just what I'm going to do. I know a lot of people say, if you think it's going to go down, Steve, why don't you buy it? That's not how I trade. I'll buy and I'll average down to these low points here and look for a bounce. That's just how I trade. So it's all about being right, guys, about making money, isn't it? I mean, yeah, you'd think maybe a little, yeah, I don't know. Very, very difficult, isn't it, to kind of now filter this move through to any currencies and think, well, should we buy some dollar now, or should we, buy some euro against the dollar, perhaps? Um, you've got to just kind of really kind of wait and see. Um, I mean, there we are. We've made the new lows now, so only by a couple of ticks, and this is where the market's going to tell us. We're either going to do a quick spike back, or we're going to continue down, and that aggressive move is down to these fundamentals. We're trading, fundamentally and technically. So yeah, making these new lows now. So as I say, what below 153 is going to be around level, psychological level, and then yeah, for me, got some good levels down here that, and I'm only looking for a short bounce. But again, I mean, these are not dangerous trades, per se. But we are trading against the kind of what's been said. If we're taking, absolutely these things as gospel, then it's looking like inflation's been a real problem. We're not seeing the growth. I mean, but if they're worried about the wider economy, the UK, then Janet Yellen's already kind of like discounted China, so we have to kind of follow America's lead. And then the day we're a rich island, and if we don't, start to control our own kind of interest rates and policies, we're going to create a situation we can't get out of. So, but yes, I mean, there we go. I mean, you can't tell me that inline data there that we can see doesn't move the markets because, it was all about that inflation report that I told you to look at. We're unchanged, the vote hikes 111, vote cuts 000, unchanged 888. So no kind of change in the voting members and the the main guard. But what we've certainly seen is that the markets are now starting to think that interest rates. I don't know. I just don't. I just can't see it personally. I cannot see how they can justify it. But obviously, the markets are taking it that way. So not a million miles away from these low levels now. We want to see them sharp spikes. That's what I like to trade into. These big sharp spikes where we kind of break through levels and we see them big pullbacks. And I don't think we'll see that for the next kind of couple of minutes really because generally when you see these things, it's kind of 2 or 3 5 minute candles, isn't it? So. Remember the big boys are all playing now. The big boys are involved. The big boys have smashed in short. Anyone that was long for a short or medium term is getting out of positions. So that's why you can see these overextended moves down in the pound because you've got short, medium, and long-term views. If we're talking 2017 for a rate hike, there's a lot of people on the wrong side of this. Then a lot of people, that don't want to take 200-300 point offside position in the pound. If interest rates aren't going to go up till 2017, then all my predictions will have instantly changed. All the things I talked about in the monthlies will go out the window. If we confirm that we're not going to put rates up to 2017, then quite easily we could break this 145. But all my assumptions are that the UK are not stupid. The UK will not continue to push consumer growth and be responsible. That savers need money. Interest rates have been proven to be an important part of a balanced economy. And really, we're talking 2017, then yeah, we could quite easily break 145, 607 and get to some unknown levels in the pound. So, I don't know. You might think of it's good news as, more free money, stock markets will go up. I see it as really bad news. I see it as really negative for the UK, I'm afraid. I just find it very depressing that we don't have anyone with any kind of balls that can kind of just start to normalise the economy. Because the longer we live in this, this bubble of free money, the worse it's going to be when it all bursts. Because history tells it does, doesn't it? Well, I mean, again, if you think the pound's going to weaken, then you've got to take that view. I mean, we've opened up the third candle now, so the third candle is below the 100%, below the low, so we could easily make a new low in the pound now. And then you've got these good levels, like I said, below 152.5. It's more the movement I'm interested in. I like seeing these big sharp movements. These kind of block trades, and then you can kind of jump in on the short term. So in the FTSE again is taking this positively, and Europe seems to be on the back. So maybe people have just, the US woke up and thought, yes, well, low interest rates in the UK, let's buy some stocks with some free money. So the FTSE is taking that very positively. DAX doesn't take anything these days, does it, to rally? And I think we're targeting 11,000, even on the back of the VW scandal and Germany, the refugees, everything else. It just unbelievable, isn't it? The amount of money that's been poured into these stock markets. Oh, I mean, I don't know. I mean, it's the market was in a slight downtrend before this. Again, maybe a lot of wicks saying that we're looking negative, but we're in a range. We're in a range here, and we've clearly broken through this range. So we have to find where the next set of value is. So these are good levels down here, these previous lows. But I mean, again, how far have we moved now? 117 ticks, not nothing major. 158 ticks. So I mean, again, maybe we have to kind of think twice about buying here for a dip. Maybe this is just another break point, and we really push it down to these levels down here. I mean, it depends how big you think the news is. I mean, if you think that inflation report is as black and white as it's going to be, and that we're really looking at 2017 before we realistically see a rate hike, then yeah, I mean, sell as much pounds as you want, close your screens, and then come back in a week. I just can't see it. I just can't see it happening. But I mean, again, it's difficult. You don't want to have too much of a bias in these things, do you? If the market's doing something, you want to go with the trend. I mean, I'm quite counter trend sometimes, but only when I've got a strong opinion. But that has cost me dearly in the past. Next attractive pair when bulls get out of the GBP. I mean, I'd probably just. I don't know. I don't really kind of look at the pound against anything else, to be honest. I mean, it's all about the pound versus the the euro just doesn't interest me. There's too much tinkering and messing around going on in that. So for me, I personally just focus on what's happening in the GBP. And like I said, I mean, there's going to be a buy somewhere, isn't there? I mean, again, we can break the daily Bollinger Bands. At this point, we're way outside the hourly 15-minute and 5-minute. And, again, it depends how strong this fundamental news is, because what you'll see is, if it's, as it is strong, it's holding the lows. So we're not seeing anybody jump in to buy a quick dip, because that quick, dip back isn't there yet. So we're holding towards the lows. So the bears are firmly in control. But you've got to figure out when they take their profit. We're not talking about the retail guys. They're already out. We're talking about, the main big boys, when they think they should take some profit out. And that'll probably take a good third of the down move out. And then probably continue down if that fundamental news is how we're interpreting it, that the UK are not going to move on interest rates till 2017. That is, if that's the consensus, then, again, we're going to see the pound get punished for that. And it's going to get continually punished into the American session. So you either get short now, and when all the, the Americans open their markets up, they're going to go, wow, yeah, no, get rid of that pound, short, medium, long term, because this is a game changer. Or we're going to see a big bounce back, and people say, nah, it's just not achievable. If the US are going to move certainly on their rates next year, certainly, the UK, I don't think Well, you don't know, do you? I mean, this is a difficult thing. This is what I'm going to have to kind of sit back and have a think about. There's no point me kind of speculating too much. I only know what all you guys know. I only know as much as, probably Mario Draghi and Mark Carney, etc., etc. They obviously know a lot more kind of data and statistics. I just know history and, I know trading. And I just cannot see how a responsible Bank of England would keep interest rates low for the best part of a decade. I just don't see. I don't see that we're seeing the growth, and we don't see that we don't see that it's working. It hasn't worked, and what we're going to replace consumer growth with. I don't know. Well, again, I mean, we're looking to make the third consecutive lower low now on the 5-minute charts. We've just opened up for the fourth candle now, so only a few ticks, and that's now a 15-minute candle. So again, this is how I'm building my picture up of what's happening. Okay, so as I say, we've got this low to make, this to be a target, this to be a target. Okay, and these might be break levels rather than bounce. Okay, so we've seen 1, 2, 3, probably see 4, but if we see 4, 5, 6. That's when you want to be buying. Okay, so you've got to see how the movement gets to where it's going, not just how it gets there. So on the 15-minute candle, again, you could do yourself a Fibonacci, you could do yourself anything you want. I mean, that's now set in stone. That is what the market's done on the back of that. Okay, that is absolutely cast iron. So it either gets back to 153.030, yeah, and tries to get back to the 50%, or we make new lows and we get down to 152.365. That's all it can do. It is going to either reject the upper fib levels or make a new low. It cannot do anything else. Well, there we go, guys. I mean, that's just another reason, isn't it, why we have to focus on, anything to do with interest rates, because that's what the market's looking at. And, at the end of the day, FTSE's taken that positively. It's filtered through to America DAX and the SMI, which means it must be big news, because generally UK data doesn't really have an effect on the market. And it'd be hard pushed, isn't it, to say this isn't really affecting markets. Done very little to the US and European currency, against the dollar. But obviously, the main traders don't really care about, what happens across the pond, to be honest. They know they're still in control. So interesting. I mean, again, I'm probably keeping an eye on the FTSE, although it's very, very bullish. Again, you look for these patterns, seeing a lot of new highs being made intraday. So again, this might be an idea to figure out where a short might be. A good little bounce. Again, 1, 2, sorry. 4 buying candles. So maybe we blip up very, very quickly to 1, 4, 5, 3. It might be a little, cheeky sell. See how the kind of daily's gone from negative to positive. So again, it's looking for opportunity. I mean, we all know that the same information now. You can figure out what I know, what the market knows, and it's either going to be a very, very strong trend based upon 2017, which is going to bring the stocks up and continue to punish the pound, or we're going to read between the lines and maybe I don't know, maybe do something else. Difficult, guys, difficult. I mean, again, it's so hard for me to trade and kind of concentrate on speaking to you guys and trade at the same time. It's difficult. It's difficult. I mean, the market's just so brutal at the minute. You have to take on so much risk in order just to make any kind of average money. But anyway, these are the target levels down here. I mean, again, if you break these levels with any kind of strength, you don't want to be holding any bounces because they're not coming. So, look for your fake out bounce here to be more down here. Okay. All right, guys. Well, like I said, there we go. Just another example of knowing how to trade or look at the right kind of products for the data that's come through. Knowing, inline data, which we've seen, absolutely in the data. It was all about that inflation report that I said, and it's them comments that have sent, the market, well, the cable tumbling. And, again, the markets have really kind of, had to go upwards, but I mean, kind of bouncing off the highs now. So again, good levels in the FTSE here. So maybe, we could see a quick chunk back. And if that starts to chunk back, maybe we see a retracement in the pound. Again, what goes up will come down. What goes down will come up. So try and trade that fundamental news from a technical perspective now. So a bounce is here or here. And we will see some sort of bounce because that's how markets work, profit taking. All right, guys. Well, hope you enjoyed that. Again, another example of how, the interest rates are more, more and more in focus now, very, very big in the markets. Anything else you want to ask me, guys? Get me on Twitter at Steve Ruffley, and you can just get my FX Street page. All right, guys. Well, there we go. You were short the pound into that. Well done. And if you're looking for a bounce, as I've said, I've told you the levels. All right, guys. Hope you enjoyed it. Been an absolute pleasure. Speak to you all very soon. Thank you.